Good evening. Thank you so much that you have found time to join us. My name is Kelvin Sanga. I'm your host. Tonight's discussion is centered on the credit guarantee schemes. We understand very well that the credit guarantee schemes are quite important aspect that need to be interplaying into the business activities. And much to this, it works out with the SME sort of arrangement. I would love to introduce to you somebody who's coming from Zambia Credit Guarantee Schemes, who happens to be the Chief Executive Officer of the institution, and this is no other than Madam Mary Mumba. Good evening and welcome to this program.
Good evening, Kelvin. Good evening, viewers.
Pleasure having you.
Thank you so much.
Okay, just to start our discussion, we'd love to know briefly about what you are doing. What are the many reasons why this scheme is in place?
Thank you so much, Kelvin. And I think before I talk about what we're doing currently, allow me to talk briefly about Zambia Credit Guarantee Scheme, who we are and what we do exactly. So Zambia Credit Guarantee Scheme is a government-owned institution under the Ministry of Finance. We were created in 2017 under the Companies Act. And our role is very simple. We support SMEs to have access to affordable credit. So we're a very, very important government policy intervention. Why I say so is that you realize that most SMEs have a challenge to access credit due to issues to do with collateral. And that's the main thing that we try to work on. So we guarantee loans to SMEs that have no adequate collateral to provide for their lending arrangements with the banks. We don't deal directly with the SMEs. How our model works is that we work through commercial banks and microfinance institutions. We have a few that we've onboarded. You will ask me why we don't deal with SMEs. Obviously, it's for reasons being that we try to avoid the issue of moral hazard.
Oh, I see.
We wouldn't want the SMEs to know that their loans are guaranteed. Okay. And so the banks are the ones that do the selection through the banks. They'll identify which SMEs require support in that space. And then once they do their due diligence, their underwriting, then they will then engage us on the sidelines to see if we could support those SMEs. And if the businesses are viable, we agree with the banks that yes, we can support those SMEs. We then onboard them on our portfolio. So we guarantee loans between 50 to 70% of the loan that is borrowed by the SMEs. And then we look at all sectors, provided that they are sectors that are active and contribute to economic development of the country. Okay. And our geographical coverage is everywhere, the country of Zambia. We try to leverage on the branch networks for the banks that we work with. I'm glad to say that we've onboarded almost all commercial banks currently. Okay. And focus mainly is on those that really want to support the SMEs. And those are the ones that we work on mainly. So we do work with microfinance institutions also, because we believe some of these on the ground, and they are the ones that have access to most of the SMEs that require our support. Okay. I'm sure some of you say, oh, the MFIs are very expensive. So are some commercial banks. But what we do is that we try to negotiate the lending rates, because you are aware that banks will be very risk averse to give to the SMEs because they're deemed to be high risk clients. Okay. So we try to negotiate the lending rates for this particular portfolio, okay, so that they can be slightly lower than the rates that are given at a commercial rate to the other general SMEs that have security. Okay. So that's how we try to see if we can incentivize the banks to lend to these SMEs. And we do that by also placing funds with the banks so that they can cushion in terms of the lending rates to the SMEs. So generally that is what we do. Then we also have a deliberate policy, okay, in terms of support to the women and the youth. We've put it as a policy that 30% of our loans are targeted to the women and the youth, because we believe those are the ones that are usually marginalized. Yeah, so in a nutshell, that's how we operate. We are grant aided, supported by the government. That's the one that funds our operations. Yeah, and with the current operation, we have a leeway also to mobilize resources just to cushion the support from the government. So that's how we operate.
Okay, so that being a policy, which has been mandated by your organization, I would love to know if maybe you could go a bit further. How does it work out in terms of selection? Do they select based on maybe say I've got a relative, or how does it fit into what basically goes with selection? Because I'm trying now to think in between the bank and yourselves. For example, if I'm the one doing assessment, if I put my relative, how do you identify that this maybe was a normal process, or how do you work it out from that perspective?
No, the banks have got their own criteria. We also have a criteria which we give the banks to follow, and they follow that list, which indicates what type of SMEs we want to support. They must be in very active economic, engaged in business, and they support in particular active economic activities which help, especially in terms of job creation. Yeah, and when we talk about relationships, I mean, that's conflict of interest now comes in. So I think the banks have policies also which help identify which SMEs require support. Yes.
Okay, you hinted a bit on the commercial banks whom you're working with. Do you extend this to microfinance companies as well, other than the mainstream banks?
Yes.
How are you working with this model with these stakeholders as far as your scheme is concerned?
Yes, we work with microfinance institutions as well, because we've noticed that most of these also support SMEs. And then one thing which most SMEs look out for is the issue of turnaround time. So those that prefer to work with microfinance institutions, we also support through those, aside the main commercial banks.
Oh, I see. Yeah. Okay. So how important is credit guarantee scheme in a developing country like Zambia? How do you see this facility working out for us, who are trying to develop SME or enterprise development?
You see, Zambia Credit Guarantee Scheme, like I earlier mentioned, the support we give to these SMEs play a very key role in every nation. They help in terms of job creation. You know that the government can't employ everyone. And so the support to SMEs is also to see to it that they enhance job creation. And also the other thing is that we help to formalize. You are aware that we have a number of SMEs who just trade outside the banking sector. And so we try to incentivize them by ensuring that if you want to have access to credit, for instance, you need to have an account with the bank. So what that means is that you're going to formalize your business processes so that you can leverage on that opportunity to borrow at a very low rate and also have access to credit. So that's one other thing that Zambia Credit Guarantee Scheme does. And also poverty reduction. I think when we support the SMEs actively, I think it has a ripple effect in terms of reducing the poverty levels to the nation. I think in a nutshell, basically, that's what we bring on board as a scheme.
So now, concurrent to your last statement, because obviously it's linked to what I would love to hear from you, the triangle benefits. Are we saying that the credit scheme is benefiting the Zambian people there through SME, and are we also speaking of it benefiting the banking world as well? And how is it benefiting you as well, knowing that you are the implementing agents into this?
Okay, how it works, like I earlier mentioned, the way the model works is that we have a tripartite kind of arrangement.
Sure.
We as a scheme will work with the partner financial institutions, which are the banks. And what we do to incentivize the banks to lend to the SMEs is we place funds with them. And then the SMEs benefit by getting that credit. Yeah, and then we try to increase in terms of access to finance. which means that with the government they would have achieved the mandates for financial inclusion. And so with that, I think it helps to bring on board as many SMEs that can access credit as we possibly can. So that's how it works, yeah.
Okay. Okay, so now jumping to the issue of interest rate, or rather the other facility that you can also offer into this. Do you also work with the line of credit or anything to do with the other financial support in terms of instrument helping to change maybe the scenario of trade and commerce? How do we work it out for those who are importing?
We do. Actually, we have quite a number of different SMEs in different sectors. We have those that are into trade. Actually, I wish to make you be aware that one of the commercial banks we started working with, the portfolio that we had actually had more of traders than the other ones in different sectors. So we do support those as well that do exports. And also we especially the ones that are dealing through microfinance institutions, most of those are into order finance, and like I earlier mentioned, the quick turnaround time. You know, orders have got limited time. When you're given an order, you need to specify. So sometimes they feel banks take a bit of time to offer credit, and so they'd rather go to MFIs. So we have quite a number of those, especially under the MFI portfolio, that are into trade business. So we do support that. Yeah, and then we also are trying to come up with just a specific product for those. So we're trying to liaise with our colleagues in Egypt who have got the export guarantee product, so that we can also have one specifically targeting those into export. I think that's one other opportunity that we're trying to work around with.
Okay, my interest also will be narrowed down on the issues to do with the youth and the women. What model? Of course, you mentioned a bit to say they learn about 30% or 35% of most of these activities. What has really triggered so much into this interest for the women-led businesses?
The issue is that they are usually marginalized, and you will note that most women borrowers have either little or no collateral at all. And that's why we have embedded that in our policy to say that 30% of the lending should go towards women. So we're very particular in the sense that even as the banks send us the list of the loans that come, we would want to see to it that women are given preference. We are not saying that they should be given preference just because they are women. We also look at the viability of the businesses that they do. But focus is that the youth and the women should be taken care of as a priority.
Okay, so in terms of the SME appetite that we have there, are we safe to say that with the establishment of the Zambia Credit Guarantee Scheme, we are safe to talk of capital stock in terms of maybe trying to develop that area? Are we safely saying that we can now see enterprise development taking off in this case? Obviously, considering so much into the aspect of the growth pattern that we should be able to record from SME, understandably that you've got an intervention that is there, more as like a special credit buffer. Are we safe to say the SME in safe hand with this scheme? What do you have to say about this?
Of course, when we talk about capital formation, of course, it's a bit wide on the market, and there's a reason why Zambia Credit Guarantee Scheme was created, and it should be able to take care of that aspect you're bringing on board. And if you look at how we operate, we try to ensure that even as we lend, we ensure that these loans are paid back, so it's like a revolving fund. Okay. We still have more capital to extend to other SMEs that require support from the banks. And I think why that is important is that we've got a limited resource envelope, and if we have to bring on board or support many more SMEs, we have to offer good loans. clean loans and support viable businesses. It's not just a matter of giving any SME that comes just because they want money. No, we need to ensure that they have a business that is viable, a business where we know that the SME will pay back, so that when the funds come back to the pool, we should be able to lend to many more other SMEs.
Oh, fantastic. Yeah. So in terms of the future that is being held with this vision and the scheme itself, do you see it to stand a good test of time? And how are you looking at the future of credit guarantee schemes as far as championing SME development activities? Is it something that we should be able to say we are creating a very good platform for growth, which will translate into job creation and the productivity in the local market? What is your view about this?
Of course, the future is very bright in the sense that the Zambian country, we have SMEs that are very enterprising, and to me that gives us an opportunity to say how much more in terms of innovation can we bring on board. And right now you're looking at the issues to do with climate change. That also brings in opportunities of its own. It helps us start being innovative. How can we come up with a solution that will help us also tap into finances relating to green finance, for instance, so that we can also come up with those innovative products and see how we can capitalize on that, bring on resource and support the country in that space, and also collaborate with the commercial banks. So I think the future is very bright. There are quite a number of opportunities that are coming on board.
Okay. Speaking of, before we dash into the last dying minute, speaking of the green finance, of course talking about the aspect to do with dramatic changes of climate, are there also some portions of allocation within your guarantee schemes that you are also centering to green finance-backed loan? Or how are you working with this model?
Yeah, there's one bank which has approached us. They've developed a product to do with green finance, and they want us to see how we can collaborate in that space. And there are quite a number of other opportunities out there which they've brought on board, which we see that they're quite important for us. I'll give an example. The issue of now developing finances like for solar solutions for our SMEs that are into trading. I think those are very key for us because we feel we can play a very key role in that space. And so that's something that we are looking at actively. And we have supported one or two, but it is something that we're still trying to see if we can mobilize more resource to go into that space full time.
Oh, fantastic.
Yeah.
Okay, as a matter of peculiar interest, I would love to understand that you are stating to say you've got interest in various financial segments. Do we have even variation even the interest rate in most of these financial interests that you or this sector that you foster support? For example, if it's energy, are we having different interests applicable to maybe agriculture sector, or how are you working out? Is it something that just standing on the umbrella, benchmark to say everything across is going with this interest rate, or you have some variation?
No, the interest rates vary. It depends on a particular product and also the risk profile that is undertaken, especially by commercial banks and ourselves. Okay. So I'll give an example like the SAF program, the agriculture program. The rates were concessional, they were very low to try and motivate as many farmers as possibly we can so they can access those facilities because we had one objective to try and improve and also contribute to food security. And then we have also other products which, and also depending on how the facility is structured, and sometimes also we look at if an SME is bringing in something, like if they're going to contribute something towards collateral, you find that the rates also are slightly minimal because there's a contribution from the SME. So depending on how the facility is structured and the agreement you have with the particular banks, the lending rates fluctuate. But the most important, I think, key to note is that we have these rates negotiated downwards so that the SMEs that are under our portfolio can benefit from this partnership with the banks.
Fantastic.
Yeah.
Okay. Lastly, in your final remarks, what are the few pieces of information that you can give out there to our audience so that you maybe get to know much more of what you do, and also just a summary of what we have just discussed, if it's possible that you can dive into that direction.
Okay, no, thank you so much. I think what's important for me, the message is mainly to the SMEs, who are a very, very key stakeholder, is that they have to be ready for change. They should be have that sense of adaptability and be always ready to have unique value propositions so that you stand out there in the market, and whatever product or service that you have to offer, it stands out and you know that you're going to have ready market. And then also to be a bit more innovative, so that even as we support your line of business, we know that that is going to sell and you'll be able to pay back the loan. Mentorship also, it's important that you get mentorship, network with other colleagues that you learn one or two things. Digitalization is another thing which is very important now, if you are to improve efficiency and also reach out to many more clients so that you sell more and be able to pay back the loan. But I think the biggest message to the SMEs is that they need to use their money wisely and also pay back the loans so that the funds are revolving and they can be given to other SMEs. And to the partner financial institutions, those that haven't yet signed up with us as Zambia Credit Guarantee Scheme, they're very welcome. I think our role is to leverage on their platforms, the networks where they're doing their business from. There are SMEs out there that require support, and it's the banks that have the eyes on the ground. We would not see which customer requires support from the Zambia Credit Guarantee Scheme. So together we can see to it that the SMEs can create jobs, the jobs that we really want to see out there, and also contribute to the economic development of the nation. I think that's what I can say.
Fantastic. This is a very quite interesting topic, I should put it, because others now have learned one or two things from our discussion. And now one thing I can also promise you is that two banks, because of this program, we are going to bring two banks.
Oh, thank you.
The essence of this platform is to connect from one point of needs to the other.
Excellent.
So business connection, as the main preamble, is to connect. So we're going to connect two banks from this platform. Dear viewers, thank you so much that you have spared good time with us. We've come to the end of this program. Please join us next week as we come with yet another exciting program. Thank you so much. Good night and God bless you. Bye.
Bye.